Consumers are stretched. 80% of people think fast food is a luxury, according to a LendingTree survey. And that's hitting companies. McDonald's, Starbucks, and KFC parent company Yum Brands all report seeing consumers pull back. And this week, Robin Gourmet Burgers reported earnings where the company is saying that inflation is weighing on its diners. To break down how consumers are faring, G.J. Hart, who is the Robin Gourmet Burgers CEO, is here with us. Thanks so much for hopping on. You got to break down some of what you're seeing among consumers here for us, G.J.
Sure. First of all, good morning to you, Brad. Great to be with you, and thanks for having me on. You know, we're in the middle of a comeback, is what we call it, and in what we call our strategic plan as the North Star plan. And so we see a little different than the backdrop of what's going on in the overall economy, because we're really driving back to some fundamentals of this iconic brand. And so what we're seeing right now is we're seeing a great take rate of our gourmet burgers, which, by the way, we've improved 85% of our menu with higher ingredients, and we're seeing a great take on the upper end of that menu pricing. Our more value-oriented tavern burgers, we're also seeing a great take rate. So we're seeing some trade down to tavern burgers, but that's okay because, you know, again, we have great value with 30 bottomless sides. So we're seeing that, and then at the same time, we're seeing things like add-ons and salads and appetizers, desserts. We're seeing those hold steady. So I'm not sure quite what that says, but what I will say for us, it's just given us some confidence that, and as we reported positive sales for the first 5 weeks of the second quarter, we feel some good momentum. But again, I think it's a little different for us because we are in this comeback.
I mean, you have companies out there, competitors in this landscape that are saying, hey, we'll throw avocados on the burger. Hey, we'll throw, crispy onions on the burger. We'll, tinker with our fresh or never frozen beef patties. All of these things that are really the jousting efforts in your industry. Is it just becoming harder to innovate on top of the burger, especially in an environment where consumers are looking for value?
Well, innovation is a key part of any restaurant brand. You have to have that to stay relevant. And at Red Robin, we've been known for burger innovation for many, many years. So for us, I wouldn't say that's hard. But what I will say is that we have a value. Our check average is a little over $17, and it's a full service experience. It's not fast food or fast casual. So you get the whole experience. It's a fun environment. So for $17, we think that's still a good value. In addition to that, we have 30 bottomless sides that most consumers don't even realize, because if you talk about bottomless, they think bottomless fries. Well, we have 30 items that are bottomless, which is everyday value versus just, price promotions one after another, like many of our competitors are doing. We think it's better to be 52 weeks a year and providing value to our guests. So, when you look at it that way, we think that ultimately, again, our consumers saying that with what we're seeing in the momentum of our comp store sales. So we think we're doing the right thing.
All right, I'm about to come post up at a Red Robin and bake in some of those bottomless fries to my financial planning for sure here, GJ. As you think about what you're hearing from your franchisee partners as well, what are they looking for from Red Robin and its leadership as they're trying to continue to keep the pulse of the consumer and engage across so many different regions?
Well, first of all, it's open communication, transparent communication, aligning around our mission, vision, and values, and what our North Star plan is trying to achieve. We have a really great group of franchise partners. They're great partners, and they operate phenomenal restaurants. And so, making sure that we're totally aligned and communicate. Their desires are, again, for us to continue to be out there promoting value, innovating value, innovating the menu all the time, but also staying the course where historically the company hasn't always done that. And so, with us and this North Star plan, we're staying true to what we're doing, which candidly, that's investing in more labor. It's providing better hospitality, better experiences for our guests. It's improving our burgers. As I said, 85% of our menu has been improved. We are continuing to focus on those fundamentals that get us back to the essence of what this iconic brand has done for so many years, to be at a place where we've got over 500 restaurants all over America. So I think that's what they're asking for. And again, I think more than anything is that open communication and listening to what their needs are and responding to those appropriately.
G.J. Hart, Robin Gourmet Burgers CEO. All right, I'm officially hungry, so we got to leave things there. Thanks so much for
Well,
taking
we'd love
the time.
to have you. We'd love to have you.
Absolutely, absolutely. Thanks so much.